The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Does this look familiar? Time warp back in North Carolina. That was a heck of a ride back here. Just got to let you know this was not easy to get back here. I spent, I think I added up 45 hours on planes or holdovers yesterday, or the last day and a half. Interesting last day and a half. Got back here, just had some people meet me in Manila from down in Bacolod in the city. I've got the office down there. Spent the day up there with them on the way back from Hong Kong through Vancouver, through New York, back here. Whew. And a little lack of sleep, so you're going to have to bear with me today. We're looking at the Shanghai immediately. Had a little bit of a downturn here. That's what inflection points are for here. If you'll notice that former unfair high around 3,000 hit that. What do we hit? The high 29.33. So again, that big psychological number, big inflection point down below it just kind of kissed 27.42. The reason I'm talking about this is because we're just going to, let me kind of scroll back here. We had gotten into, I would call it the danger area for a little while, this hole in the marketplace between 2371, 2800, let's just call it that. Flirted with it, came back to 3,000. I still believe this thing could actually head a little lower and explore some more of this hole down here. What does that mean for the U.S. stock market? That's what we're always going to try to pair here. And here's the daily. Again, not a pretty situation. I think we could actually head lower on this. And I've been looking at the breadth to kind of give me some guidance on there. I'm going to go back to our scanner really quick, go back into the indices section. And as we look at this, the seller dweller, the Shanghai down here, the breadth really hasn't changed that much. We've had some weekly new profiles attempt to appear down here, but as we look at this, and we go into our odometers, the daily, again, not the long-term barometer. This one started showing some hints of turning around, but again, you got to take it for what it's worth. The long-term crossovers on this Shanghai really mean something. I'm going to blow this up for you and remind you that, this crossover back in July 2014, that crossover to negative again, 1st of January, we've had some reasons to kind of catch a bid in this market, but right now this is still just ugly situation. That's why, looking for inflection points to sell on this thing. And if you'll notice the sea of red happening here on the internals of the 180 Shanghai. But that being said, it's really wild how the U.S. stock market kind of, hey, it's the Shanghai. It's a whole nother world away, and it's a rigged marketplace, and we're going to have to just kind of let those volatilities happen over there. And then we've been talking about that, the relativity of this U.S. stock market in relation to, in relation to what's going on in the world has really been very positive. And yesterday morning, I was, kind of without internet on an airplane probably the whole time that this was going on. But yesterday morning, we flirted with, the big time bid on this 1898, the support after we broke out and have kind of used it again. Just want to state immediately that 1944, that general area is a new unfair high, new profile. We've reached a high already today of 1938.50. I think we could actually kind of revisit that. That's going to be your resistance on this particular profile. You got to pay attention to that. Any closes above there, 1975 is more than likely going to be in order, and 1944 is going to be that support. Seems like we don't really care that much about the Shanghai. Here's where I'm getting those inflection points, 1975 up there. But I want to note that I was kind of looking back at this after I got settled, which was, 2 a.m. last night? This has been a sleepless couple of days here. But as we look at this 60-minute, one of the things we always look for overextensions on where to take the weight off. Yesterday morning, there's at 9 a.m., there's at 10 a.m., and if you'll notice, we kind of got into that 70% range again, and we're gonna have to lay all of this on Tucker if he's in the den, the back the truck up area. But again, I'm looking at those type of exhaustion moves as I'm just joking, Tucker. Those exhaustion moves as a reason to start taking the weight off on the short side. So you had that happen back in the 11th. You got that overextension. You had it happen back on the 8th. When we get into that 70% territory on the downside, you've got to be willing to look at that as at least the moves close to being over in that direction. So if you'll notice the pair down below, we started kind of racing again north after that and getting back above 1900 or 1898, and that was kind of what I was waiting for. In normal situations, I wasn't doing it yesterday, but in a normal situation, when you see those overextensions and then you start clearing some hurdles, 1898 in this case, then I'm still looking at this market more from the long side than the short side. And did Steve Rhodes do the show yesterday? Were you guys watching yesterday? Was it Steve that filled in for me? If anybody, nobody knows. Anybody in the den? Basil. Okay, Basil. Thank you. They said it was a very good show, and Basil, thank you very much for doing that on spur of the moment notice. I was in customs at that point and couldn't get out. I was trying to do the show from the airport. So Basil, thank you very much if you're listening to the show. And as you know, that's always good when Basil does the show. So, God, where was I? So as we look at the S&Ps and we kind of, traditionally get back above those inflection points, and the long-term bias is kind of, to the north side, that's kind of what you're looking for. And that was, really in order yesterday. And I hate to be a Monday morning quarterback, but right now, what do you do moving forward? Again, 1944, you got to be willing to lean on that today. Stops above. If we get going north of this, and especially get a close above it, you're going to have to look at that as a new serious inflection point to pay attention to. Here's the 240s. There's that 44 area up there. That was kind of put in yesterday along with that daily, yesterday, and then the daily's kind of coinciding with that today. Just another inflection point, obviously on the 240s, beware of 1937.25, but again, that 44 area is going to be the big number. We're going to hit the notes here really quick. And, this one relative to the XLU, we're going to talk about when we come back. Again, the market moves south, bonds seem to go north. Market moves north, bond seems to go sideways. We're going to talk about that a little bit when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
How about now? I got a new headset. All right. So, really good question before about what do these gray bars mean? I mean, we've got an indicator called Vega. I usually leave it on when I'm showing charts, and basically it just shows you when we're within profiles, and you know, these yellow bars we talk about all the time, these are indications that a new profile is going to attempt to appear. When you have those, that's not necessarily a turnaround type, go opposite direction type thing. And what that does is, let me see if I got okay, so what that does is when we go into the scanner, we've kind of mapped this to kind of follow all the indications that we get from Vega, and then put in a little more extra information. I actually like using the scanner better than the indicators. I'm just showing the charts because I think we'd lose our minds if I just showed the cell structure the whole show. But if we go into the 10-year, for instance, and this is how we find opportunities, is try to find, you know, situations that we would want to see on the chart that actually we can kind of identify within the cell structure of the scanner, and then do certain sorts and try to find opportunities that are acting a certain way as far as our profiles go. So here's a 10-year. So as you see that 35 in the arrow up, that's basically saying that we've been in a long-term or an intermediate uptrend for 35 straight bars, and that's what the arrow up means, even though we're within the balanced area, the gray area here. So I'm going to go into our landscape view, and this is basically saying that the level of the market's within this profile. Therefore, gray cell, we're above profiles on the weekly there, but this is the same situation on the 240. We just started ticking down a little bit on the 60. So, and let me show you this. So here's the 60, just to show you that kind of red. I think it was a red 3. Yeah. And we're 3 bars consistently below this short-term profile. And here's the 240. We're within the profile there. That's why that was great. But again, going back to the scanner for a second, what I really love to see is when we're within a trend, and even when, let me just find an example. Here we go. So on soybean meal, I know there's a lot of soybean meal traders out there. As we look at this, you'll see, we've been in a downtrend by definition. You see that yellow peel back happening on this time frame. That's an indication that it might be a good idea to start looking at taking some weight off on the short side. So if I look at this, and I go into the weekly, that actually means that we're probably going to have a new profile appear. Even though this thing is just languishing down below, we're going to get a new demand area is what that's saying, more than likely. If we have a Friday close and that's still yellow, and if I go back to the 10-year, I'll kind of show you this. So this is our daily on the 10-year. So the day closed, therefore new profile outputted. But this was probably, I can't remember what happened yesterday for that matter, but what happened 2 weeks ago on this particular day is we probably started getting yellow about right in here. And then that's an indication, trend might be kind of failing for a while. Going to have some new inflection points to pay attention to, new support areas possibly to pick it up lower. And that's what I like to see is, yellow peel back. Might be time to sit on the sidelines for a while. Let's try to pick it up cheaper. Trend is not in danger when that happens. I mean, trend's not reversing when that happens. It's kind of in danger, and you're going to be able to kind of find new support areas just like we found there. I think that was to the tick. So when we have these things happen, these yellow peelbacks, a lot of times you'll have the whole fair auction explored after this happens. And you can use other indicators. Basil's got some insane information. Larry, Steve Rhodes, David White, Andy Heck, Daryl Martin, Tommy O'Brien. A lot of times you can use, okay, now what happens when we get down here? Should I be buying this inflection point or just waiting for the breakdown and passing on the buy? A lot of times you can glean some information from some other folks on this network and possibly get some kind of biased opinion around there. And then, that therefore slows trading down, which is not a bad thing in my opinion. You've got a lot of different, waiting for the stars to line up a little bit there. And, therefore, you can kind of sit in front of these keyboards and not bang the buttons as much, which has been proven to be a good thing when it comes to trading. So to answer your question, RJP, those gray bars mean we're really just kind of floating around in a balanced area now on this particular time frame. And that gives us a chance, going back to the scanner, if we go into our S&P 500 section, if I want to see, what's been putting in new profiles on our daily or attempting to put in, this is as of yesterday's close, by the way, because eSignal's not giving us the daily information yet. I don't know if a lot of daily charts are showing stocks when they don't show pre-market activity in the dailies. So let me read here. Let's see. Is somebody saying Larry's insane, or Larry's just plain insane? Oh, Larry's saying that. Oh, okay. Here we go. So as we look at this, and as we noticed, and let me go back to our breath situation. Okay, so on yesterday's close on the S&Ps, there was 31 stocks, 6.2%, attempting to put in new profiles up top by the end of the day. That's not really a big indicator for me. I mean, when we get above 10, 11, 12%, then I start looking at that as an internal kind of summation saying, you know what, we're slowing down. It might be time, sit tight, especially if you've got some inflection points on the S&P at the same time being hit. Now, as I go back to the S&Ps, just a little bit of an education here. We obviously had that yellow appearing. Again, there wasn't many of the internals weren't kind of coinciding with that. We just saw 6.2%. But when we have that new inflection point, 1944 on the S&Ps, that's, we could start exploring some more of this fair auction down below. So that's kind of an indicator in itself. And that Shanghai seems to be ignored right now. But That's interesting how that may be a delayed reaction here, and that's something to lean on. On the 240s, you got that 37.25 area. We're going to take a look at gold really quick. All right. So, we kind of hit that to the tick the other day, that 1201. What was that? 1202, 1202 and a half. What do you do with this now? To be honest with you, this looks, if I'm short this, I'm really not happy. I was hoping we could start getting below 1200 so we can maybe start finding some support down below and I could trade this from the contra side. And thank God that didn't happen. We'll be right back. We're going to talk about gold a little bit more when we get back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yeah. Okay. So a couple of things here. To go back to gold and talk about Navigator. This is crude oil. Navigator is a great tool. Obviously, I stake a lot in it, but I like to use. Again, people have different trading MOs, and I am not totally convinced that trading on an ultra short-term basis is the best thing in the world for me. I mean, if everybody traded the same way, this market would kind of not be available to be traded. So different people trade different ways, and you have to eventually, you have to treat this like a business. I know you've probably heard that before, but you got to figure out really how to kind of twist it in a way that works for you over time. What we tell our prop traders are, in a nutshell, is, we try to give them a fundamental foundation to kind of stand on, where we know that's a pretty good break-even scenario. And a lot of guys, like, you'll have 10 guys sitting in a row, and they'll look at the same information and kind of trade it differently. And what we want to do is, everybody kind of develops a little bit of their own risk tolerance within the realm of risk tolerance that we give them to act in, and also, be able to kind of figure out the time frame that's going to best suit you within that kind of risk parameter situation. And for me, it's not, at this stage of my life, maybe it's not sitting there trying to trade on 1 minute or 3 minute or 5 minute profiles and all the noise. I mean, I consider a lot of those things on a very short-term basis just general noise of the instrument. So backing up and answering the question about Navigator, I look at, if you watch this show enough, you see me talk about daily inflection points. There's one on gold there. There's kind of a breakout again. Here's some up here. These are things that I really try to, as much as I can, wait and be patient for these things to kind of be approached, or wait for the market to come to me. And that being said, Navigator's got a lot of uses, but I kind of look for divergences on a long-term basis in Navigator. And right now on gold, you really don't have that developing. So, do these magenta bars mean something? Absolutely. When we have 3 of them line up, that's usually an indication on a long-term basis that you might be having some exhaustion move. But I tend to use this particular tool downstairs, which we ultimately will have in the scanner, as a divergence type situation when it's offered. Now, another question is, okay, yeah, okay, this is a great question, actually. RJP is saying that one of my associates was using some I'm assuming some profiles that kind of might move around. So what we've done, and it's just the way that I decided we would run the scanner, and some of the things I show on the show. We have real-time boxes, which, when we have a yellow situation like on Adobe Systems on the weekly, that's saying that, hey, we've got a new profile attempting to appear. But if we have a new profile attempting to appear by way of the yellow peelback, that means that we also can kind of emit what that profile attempting to appear actually is. And we have, real-time profiles, real-time boxes that we put on some indicator packages, like I think RJP is probably referring to, that you can view. But, they may disappear. They may move. They may recalibrate themselves. And what I thought would be, again, in my trading style and my kind of MO as far as long-term situations, I want to see something actually put the stake in the ground and lock in. So when the profile is possibly moving around, like an American Airlines group, as I'm showing in the scanner right now, that yellow peelback, that means that there is a new profile out there. It could move around and adjust itself the whole day. It could disappear completely, but that yellow is just telling you, you know what, something's trying to enact. And, it's difficult a lot for some folks, me included, when you have that new, and it gives some new inflection points to pay attention to, not that they will stay in force, but, for somebody like me in my trading style, I want the indication. I don't want to get caught up in profiles that are kind of adjusting their self intra-bar. And a lot of times you'll see, even, Thomas DeMark, what have you, you go back in time, some things have repainted their self on the chart. So historically, they look a lot more, they have a lot more fluff to them looking back in time, because they kind of repainted their self to an optimal area. And I don't like to do that. I mean, I like to say, you know what, new profile attempting to appear, in this case, new indicator. It's not going to, if you look back in time and that indicator locked itself in historically at the end of that bar, and you would go, oh, wow, it worked out perfect every time. I mean, I don't like to, I'm probably just beating this to death, but I don't like to just, kind of have things look pretty in the past. That's how people get in trouble with these automated systems, is a lot of these systems will optimize themselves and pick the best possible scenario based on the indicator during the bar when it actually closed a certain way, and it gives very false results. So that's why, you can look at real-time profiles attempting to appear. You can look at the boxes moving around. But I personally just like, and that's the way I constructed the scanners, to really show that profile in this manner. So it doesn't cause any lofty aspirations looking backwards and moving forwards. All right. Again, working on not a lot of sleep here, guys. Apologize for the rambling. Let's take a look at crude oil. This is the April contract. And, we talked a lot about this on the March contract and then the XLE. There was some divergences happening, in my opinion, here. Here's a great example, Tucker, of kind of, right at lower lows. I don't know if it made lower lows, but Navigator making higher lows. And that's the real way I like to use Navigators, is just to look for those divergences. In fact, that Bloomberg brief was kind of based on this. I still feel pretty rosy about oil in general, but that was one of the things that was, causing me to look at it in a certain way. We're gonna hit the XLF really quick. I mean, we had a pretty good move yesterday, and let's just see where we are pre-market again with the S&Ps. It's kind of hanging around up there, huh? Okay, looking back at the XLF. These financials have been the seller dweller when it comes to looking at things in the scanner. So when I go back to the ETFs and I go into the XLF, this is my daily ranking system. We're still, everything else is breath positive. This thing's still kind of just looking ugly. Here's the weekly. All right. So as we look at the XLF in general, we got about 15 seconds before the break. Here's, kind of popping its head back above the 2084 area, but I'm not so sure that this is the best snapback reaction for your money right now. Even if you think the market's going to head higher, I want you to look at the weekly situation here. This is not the rosiest picture in the world, and you've got even bigger things to contend with up top around 2193. So I got some emails about the financials and some bank stocks. I still don't think this is over for those guys, and I think you got better ways to put your money to work on the long side. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. So the XLF, again, we're just kind of, here's that good example, that new profile attempting to appear, and then we have the profile this week, lock in. I think you got better ways to put your money on the long side than the XLF or any of the internals right now. My God, no sleep. Whew. All right, let's take a look at the XLE really quick. Again, crude, in my opinion, is still holding up. XLE, if you notice these higher lows here, we're right up against a 5706 area. And I'm going to go to the scanner really quick. I'm going to go back to my dashboard for a second. Let me just pull up XLE. Well, XLE. If you notice that top there, that's letting you know we're at the top of a profile. Or in the vicinity of that. So, again, you want to see it close above. I know we've already done that. That's what stops are for. But I'm, still thinking the crude oil could get some momentum up into that mid-30 area. And then the XLE could possibly just continue to move higher. I like how it's compressing up right now. Let me go back to the April contract really quick in crude oil. Actually, 36.28. The good news is I think you got a great risk reward on crude in general right now. All right, let's go back and take a look at, I want to take a look at some currencies here. I think I've got them up. Dang, gummit. Let me get my currency server started. Okay. We've talked a lot about the euro. We talked about the next leg down being 109 on this. I like this right here. I like this a lot. I like this 110.45 area as a lid here. And I'm not looking at this as kind of forming a bottom. I'm looking at this as consolidating below these profiles for another leg down into 109. Australian dollar, this is something I was really just hoping and praying we could get back above this 71.69 area. Now I feel okay that we could launch into that 74.39 area. So that's we talked about this particular level for a long time. Kind of broke my heart back in 1st of January when we got below 71.69, but now we're back above. I want to see a weekly close. Tomorrow's the weekly close. Then, the Australian dollar is really, to some degree, held up relatively well in the midst of a commodity bashing. So I'm looking at trying to catch a bid on this 71.69 and that 74 and some change. Here's the daily on the Australian dollar. Again, decent support, 71.69, 71.86. I really like how this is acting. And any type of upturn, gold obviously has had some bearing on that recently, but I like the way it had been holding up before that. Let me go back to the correct server. So we're going to hit silver really quick. I'm looking at March silver. That's my continuous contract. If anybody knows different, let me know. So 1514, 1515. I'm not, gold, you could look at this as support, but again, I think you playing around with silver on the long side, that's been a decent trade. Obviously, you guys have looked at that if you took a couple of stabs at it early. I'm not so convinced that this is the best thing on the books here. So I'd rather be looking at gold from the long side than silver from the long side. Let's take a look also at a couple of stocks that were in the news. Wednesday's earnings, some of the bellwethers, HPQ. If you guys are trading some of these instruments, we'll take a look at the inflection points here. And these are also right in the scanner. Here's the lofty aspirations on HPQ, 11.07. Market should have dragged this up a lot higher. If you've been in HPQ and you're looking for a place to get out, that might be the heavens right there. Let's take a look at another one. I'm not a big fan of going long this. That's a shorting possibility around 11.07 for HPQ. I think that business model has changed so much. I just don't see, fundamentally speaking, I don't see just don't see the value there of piling into that. Here's Lowe's Companies. Let me see what we did yesterday. Let's see on the close. Okay, so excuse me. That was a yawn. Well deserved. I don't see. I don't see a lot of leverage here. We're just kind of rattling around within a fair auction. 71.61 this week already. Put a gun to my head, it's more of a long than a short, just based on the long-term action here. But, I can't really say that there's a lot of leverage on that one. Let's take a look at CRM, Salesforce. You know what? I don't want the 5-hour energy. I actually want to sleep right now. 63.52. So, again, post earnings, we're trading 68.85. So 63.52 is that weekly unfair high. We're significantly above that. I don't like to trade stocks before earnings, but before this happened, we had a little bit of a compression here. Now we're off to the races, and next stop up on this, you've got to really pay attention. I don't think there's anything to hang on to trade it, but if we can get back up into this 72.50 area, that's going to be your targets on this, and that would be the wishful thinking there. But right now, on a short-term basis, you don't have anything to hang on to here. This is kind of wait till 72.50s possibly hit again. Target, something in the news yesterday. Here we go. All right, so 77.20 looks like pre-market. 77.20. Okay. So, again, I'm not a big fan of trading earnings, but here's the classic close above, go back and retest, and here's where we're at on the weekly. So you've got really huge support around 75.72 now in this stock. Any type of retracements back down into it, we could actually get a little bit more of a ride up into 80.17. I want to take a look at ExxonMobil really quick. This is one we've been really trying to pay attention to on the long side. And then again, this is an example of these higher lows in ExxonMobil, lower lows in crude oil, XLE type action. We talked about this 84.29 being the upside targets. We've come down recently. Remember, the top of the mountain is 79.58 on a relatively wide profile, bounced off of that. I still think now, and that kind of coincides with this 79.22 bottom of the profile on our daily. Really good action on this. I'm still looking for this to get back above 84. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. So we're kind of finishing up with ExxonMobil, and I like the way everything looks with this stock. I've liked it back from the 71 general area. We've talked about that. If you watch this show, this has been something that really showed itself, and we always try to use the scanner to try to find those things showing themselves early. And again, I don't think it's over. I think crude oil's got a good chance of rallying here. If it doesn't, you obviously want to be in things that are going to be as least painful as possible if you're wrong, and finding instruments that are showing themselves. We always talk about that. And ExxonMobil really, it takes a lot to move this stock. I'm just so impressed how it's just kind of continuing to rattle around and move higher. Something else, let's take a look at RIG, RIG. In the spirit of boring you to death today, here we go. So we got a little bit of a move up yesterday into 870, and again, this is just kind of getting back up into that unfair low around 880. So, this has not been the darling of the XLE world, and this is a great example. The reason I'm pulling this up is because ExxonMobil obviously got the legs and showed itself. RIG showed itself to be something that nobody really wanted to buy, and this is, there's a reason for that. It doesn't mean that it's on sale down here. And the earnings come out, it pops his little head up, and somebody whacked it right on the inflection point, and That's all she wrote, and that's all. That's really all to say about that thing. I mean, crude oil could, if crude oil continues to go south, guess what's going to happen to this thing? I mean, the hopes and dreams are on, crude oil going north for this particular stock. If they go down again, it's just it's going to be an ugly situation. All right, Chesapeake Energy. Let's look at this one. 22% up, and this is kind of cool because you've now got a new profile attempting to appear. It's a $2 stock. I understand that the downside's zero, and we have crossed some borders here on the daily here. So you've got decent support now at $2.15. I know that's 60 cents below where it is now, and you've got some 240 action. You've got short-term support around 252. Now, this is something I normally would not, be talking about a $2 or $3 stock, but this is one. It doesn't mean you can buy 100,000 shares of it and walk away either, because it's $2. You've got a decent technical situation, in my opinion, but the main one is that new weekly profile attempting to appear, which may provide some weekly unfair highs that are attainable. And again, we've had a pretty good move here. I don't want you to buy the high print. So you've got short-term support 252, and then you've got really, really good support, which it's already used, actually. If you notice, I can... and Tucker, here's kind of one of those lower lows and higher lows in Navigator. This is something we've been kind of bashing here because it hadn't showed itself early on our XLE talks. But right now, a little bit of an opportunity here. So close above, go back and retest. And then yesterday had that move up. But again, big support's 215, short-term support 252. Let me see here. Yep, here we go. All right, guys. Thanks, Dinners. You've been great. Stay tuned for Larry. He's usually entertaining as heck. Stay tuned. Back tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.